Welcome to 22 Minutes in Lending. I'm your host, Vince Passione. Today's guest is someone who knows the credit union space inside and out and spent nearly 30 years shaping it. Steve Willis, president of Leverage. Steve started his career in auto lending before taking on key leadership roles at the Michigan Credit Union League. In 2016, he joined the League of Southeastern Credit Unions as COO and now leads affiliated consolidated services and Leverage, two powerhouse for-profit arms of the league, supported nearly 900 credit unions through innovative partnerships and solutions. Steve, welcome and thanks for joining us today.
Thank you. Looking forward to chatting with you, Vince.
Same, Steve. Hey, Steve, we had Samantha Beeler on the podcast recently, and she runs the league and affiliates, but you oversee the league services core. So, can you describe the distinction in the structure and how one supports the other?
Yeah, Leverage is the service provider that helps credit unions grow and succeed. So we really try to do this in about three different ways. We acquire or invest in companies or QSOs, that provide immediate value to our credit unions, like Leverage Payment Solutions, Credit Union Audit Group, Credit Union Vendor Management, Combine Title. These are some of the companies that we've gone out and acquired. But we've also built some solutions. True Treasury was one of the ones that, we partnered with a couple credit unions, a core provider, and MDT. So we've looked at different ways to do this. And then we go out and we find partners, best in class fintechs and service provider partners that are basically remarketing agreements that we go out there and we sell their products across the country for them. While this is our approach to product development, we also work closely with the league, getting feedback from them with the credit unions are, some of their needs are. And then, we support their events, their initiatives. And then recently we did testimony on interchange for them. So we have some experts on our cards processing team that went before the Florida Senate and gave some feedback on the interchange that helped in their advocacy efforts.
Yes, I was going to ask that. So given the league's role is also doing advocacy work and lobbying, are you guys typically brought in, Steve, to be sort of subject matter experts in going to the Hill?
That was the first time on the interchange because we have the card processing.
Hmm.
That was one of the few times that they've come to us and asked us to give some expert testimony. But, with our audit group, that would be another one that, with the NCUA and everything, that they might reach out to for advice or direction too. So we do have some experts on the team that could help and support their efforts.
Understood. Now, how do you select these providers? I mean, do you run surveys with your customer base and figure out what subjects or what areas they have interest in? How do you come up with this every year?
It's really a lot of different listening. Being a good listener, which is kind of a skill that some people don't use as much anymore. But I believe in listening to what our credit unions need. We do it by one-on-one conversations. We have lead consultants that are working with our credit unions. We have in our card processing company, we have consultants there. They're out talking to our credit unions. So really they're getting to understand what their needs are. And then our league association, they have people out there too that are getting the feedback of what the challenges are that their credit unions are facing. And then we have committees. We have an innovation committee made up of credit unions on different levels that get together once a quarter and talk about some of the solutions they've seen or some of the challenges they face. And then, events, we put on a lot of events. We go to a lot of events, Money 2020 I go to, I look at, what kind of solutions are out there, what are things that could help us. And then networking, you and how many times do we chat a year about things that we see as pain points and,
Exactly.
trying to solve. So, it's really just listing out there what the needs are and then trying to go out and find the solutions.
No, got it. No, good answer. Steve, we're in some interesting times, right? I think I've said this now a few times in the last couple of years, right? We had the pandemic and now we're dealing with a really interesting time where things are just very unpredictable, right? Stock market's up and down. The bond market is doing something really strange. There's a concern, are we really in a recession yet or not? And credit unions were just sort of coming out of a difficult time, right? As many of the other financial institutions were as well, right? Liquidity dried up very rapidly, default rates were spiking. Is this within your remit to sit with credit unions and help them plan and figure out how to prepare for things like this? Or is this something that they would defer to a different group?
You know, it's a little bit of both. first off, credit unions have been through volatility before. The mortgage crisis of 2008, COVID. And when we go through these crises, we try to find out what's causing it and what solutions can help them. So during COVID, the employee retention credit, we went out there and helped our credit unions, get their employee retention credit. We also just recently, because liquidity has been a challenge for our credit unions. So we just recently partnered with McQueen Financial to help with, asset liability. So during these times, we're looking for partners that can really help our credit unions through these challenging times. So not just even in the good times, you know, it's funny. It's almost like it's cyclical because you're going to go through a couple good years and you're going to have a bad year.
Right.
So when we're going through the good years, we're still looking for what are the challenges that are going to be on the horizon that we can prepare for.
Yeah, so I want to reflect back on a quote from Samantha's interview. She said, credit unions must shift from being finance organizations that use tech to being tech companies that deliver finance. So, do you agree with that statement? Do you want to embellish it a little bit more in your experience working with a lot of these fintechs directly and with your partners?
I think it's a mix in the middle. I think that they can't forget that they're a credit union because, the membership loves still to come in the credit union, say hi, do those things, but they also have to provide the services of the fintechs, because we are having a younger generation that likes to use the phone, likes to have more technology. So I think they got to find that happy medium, and then they got to go out and do the research because, what fits into their core, what doesn't fit into their core, what are they, you can't be, you know, you're not going to make everybody happy. So you got to find those fintech companies out there that can really speak to your membership and the products and services. And honestly, like one of the things I do, I belong to, I think, 6 credit unions now. And I look at the products and services they're using to see, hey, what excites me when I'm on their apps and everything. So I'm always trying to learn too.
No, exactly. But as you think about your goal for the partners that you bring to your members, your credit unions, is it to help them select or and say, look, these are, as you're thinking through, because look, there are over 10,000 fintechs and over 40, maybe 4,500 credit unions now, last count.
Hmm.
So that's a lot to parse through. So is part of the remit, part of the objective of leverage is to help them select the best. And then beyond that, do you help them figure out how to integrate it? Because you said core, I'm not sure you're talking about their core systems, but we all know
Hmm.
that's a tough job.
Yep. Yeah. So, that's a great question because we're trying to do both. We're trying to go out there and find those companies, fintech companies. I wouldn't even say fintech companies. I mean, if you look at our portfolio companies we own, most of them aren't fintech companies. Most of them are, we have a PEO that we do offer
Right.
payroll. And
Mhm.
so we're looking at different things to help our credit unions across the board. So, but we also look at do these products and services integrate with their systems, So if we go to a fintech and they're only going to integrate with one core, we're probably going to take a look at another fintech that does something similar to see if they integrate with 3 or 4 of our cores. So we're always to make it easier for our credit unions because once you start getting into all those the APIs and all the stuff integrating into the core or their LOS, it costs money. So we're looking for ways to do it the easiest, financially responsible way for our credit unions.
So the league represents about 400 credit unions, is that right?
Yes.
So that's about 10% of the system. That's a pretty big platform. So I gotta believe there are benefits and there are probably risks when you're at that scale. Can you talk a little bit about that as a solution provider? Because I mean, there's that. I still remember the first time I talked to the NCUA when we were building a network, and one of their concerns was, well, you create systemic risk, right? Because you've got such a broad reach. So, what are the risks and benefits of working on a platform with that many credit unions?
So the biggest benefit is scale. Vendors want, someone who can deliver their products and services to the credit unions. We're one of the few that, we really do deliver. We vet those products to make sure when we go out in the market that we can deliver to those products because they're not going to come to us if we can't deliver what we say we're going to deliver, right? So we really go through and make sure that that product and service is going to do what it says it's going to do. So when our consultants get it and take it to our credit unions, we have the success. Now, the risk we always have is reputational risk. What keeps me up at night is reputational risk. If you partner with somebody that does something they shouldn't be doing, so we have to make sure we vet these vendors or partners thoroughly to make sure we minimize that as much as possible because, we're the trade association. We got to look out for our credit unions. We want to do everything we can to bring that product and service to them. So that's probably my biggest thing I worry about every single day.
All right. So I talked
Well, I
about,
want to add one other thing. The other
sure.
thing is because their membership dues in our association side, you know, we always got to make sure we're helping our credit unions because we don't want them to think we just brought something that's not going to fit or, pulled one over on them. We really got to make sure we keep them happy and trust us. We say trusted partner every single day because we want to be their trusted partner. And I always tell my team, I'm like, no is okay. We just want to make sure they understand the benefits of our products and services. If there's someone out there better that they found, that's great. We want them to have the best products and services. Never hurts my feeling for someone to say we're going to go over here because there are other better products and services. Some cost more. Most of them that are better usually cost more, but we want them to go out there and vet other products and services to make sure that fits their need.
No, and that makes sense given the disparity in size, right, of some of the credit unions that you serve. I want to go back to a point, though. You talked about the number of small credit unions, that small credit union designation, and I was recently at a conference, and there was a whole discussion about shared services, right, and how shared services can really be the solution for smaller credit unions. But the question is, when you're dealing with shared services, how do you personalize it for that credit union? Is the credit union just part of a pool that outsourced a service, or can they get personalization out of it? There are examples where you've been able to do that.
Yes. So in our PEO, we do their payroll and their employee benefits, and they're dealing with our people at Leverage. So they get the personalized service from Leverage. They're not going out and using a third party. They're using us in those situations. So we're looking at more of that fragmented, you know, those products and services from accounting to IT to really help our credit unions. But yeah, we really want to be a part of it to help them grow and prosper in those products.
I want to go back to this idea of exposure to the broader tech community, exposure to what neobanks are doing. Do you think it's limited to the CEOs? But what about the board? We're at your conference, right? There was a lot of conversation about boards. Do you think the board members need to also be educated on things like cybersecurity, right? We saw a couple of ransomware attacks. How does a board member get educated and get exposed to the broader fintech community, technology community, and the risks?
Well, and I think they got to get an understanding, like you're saying. I think they need to go to workshops. They need to go to conferences. There's a lot of online information out there that you could put together and educate them. I mean, it's an education. If you're not having your board, how do they make decisions? How do they help guide the credit union? They gotta be out there understanding. And I know they're a board member. They don't get paid, but they need to be involved in understanding what products and services out there can help the credit unions because it's a changing market too. I mean, one product can be there one day and they have a totally different product there the next day.
So you made this investment, or you have a partnership with Defense Storm. And my understanding is a lot of I know Jeff Lunsford, the founder of that business, and my understanding is that's cybersecurity, correct?
Correct.
And there's been a couple of ransomware, very very public ransomware attacks on credit unions. It's expensive, right? Talked to one of those credit unions, and they talked about remediation and what they have to do now, and bringing somebody on board to be the chief information security officer. Do you think credit unions are distracted and took their eyes off the ball when it came to these kind of cyber threats, or do you just think they were trying to get there but got hit by some very sophisticated rings?
I think they're trying to get there. It's one of those things where there's so many different products and services out there, and they're very costly. So which one do you go after first? Where do you protect the credit union first? I mean, I get emails every single day, and I'm always emailing my IT department. Is this legit? Is this legit? I mean, there's so many different ways they're scamming today that you have to be getting educated. We do just for our for Leverage. we do training 2 to 3 times a year for, emails, phishing, and all the other things. So it's going to be a long-term battle. It's going to get probably worse before it gets better. Every time they come out, then the cybersecurity counters with other ways to help prevent it. So it's a game of cat and mouse. I mean, I was in Vegas when MGM got hit, and it shut down all of MGM casinos. I mean, I've never seen anything like that. So you're just, how can that happen to a multi-billion-dollar company where it shuts them completely down? So I think it's very important to credit unions. I mean, you're at the executive dialogue. That was a topic there that, they got to continue to be prepared and find the products and services that can help you. But we also got to make sure these products and services are cost, controlled where it doesn't, hurt them.
No, it can be very expensive. And when you start getting into things like disaster recovery scenarios, it is expensive, very expensive. And we know that well. So what's the role of the NCUA here, Steve? Do you see exams changing? Do you see, the NCUA creating standards? I know, they certainly have come in and evaluated us and spent quite a bit of time on security, and we benefited from that. But do you see as things like ransomware attacks are increasing and are on the rise that the NCUA is going to shift their model and exam?
Yeah, I mean they do all the time. They shift from my perspective. When I talk to my audit team, there's always hot topics. Sometimes it's vendor management, making sure the due diligence is being done on the vendors. Um, but I think it's going to be a challenge, and I think it also has to do with the NCAA is who's in office, right?
Right.
I mean, there's lots of changes going on right now, so. Um, I think they do a really good job. I think they work well with our credit unions. I think they have the best interests of our credit unions and they want to help protect them. So I support, the NCUA and things they're doing. And I think that we want to help and do everything in our power to help our credit unions so they don't get hurt.
Yeah. Now, Steve, we talked about uncertainty in the opening, and you and I have talked about this in the past about deposit outflows, right? We saw deposit runoff. Deposit betas went through the roof. Things have settled down a little bit, and we're starting to see some liquidity come back into the system. And a lot of the credit unions short up the other side, the investment side of the balance sheet, and they've gotten shorter, so that's helped a bit. But it's still a problem. Um, what are some of the solutions that you're thinking about to help the credit unions better manage liquidity, maybe attract deposits?
You know, um, well, obviously I talked a little bit about it earlier. Charlie McQueen, we've had a partnership with Steeple over the years. They're another one that can help. There's some new companies coming in the market, like ModernFi, that are helping with liquidity. Um, I think it's going to be a long term, until the market changes. It's just going to be tight. I mean, there's only so much money to go around, and credit unions got to find different ways and avenues to get it in. It could be by raising rates on deposits. There's a lot of different things to do. I think CDs have kind of you know topped out right now. I don't see them going back up. I think they're coming down a little bit now.
Right.
Obviously some interest rates are coming down right now on the auto loans and mortgages. Not enough on mortgages yet to make get a refinancing boom going, but um, there's got to have to be some ways we have to keep looking.
So let's look ahead a little, Steve. Um, we have obviously credit unions are in this audience. What's one of the technological trends or shifts you're seeing now that most credit unions aren't talking about yet, but you think they should be?
Oh, that's a tough one because from my perspective, when it comes to new and innovative products, I like to watch first. And because we're a trade association, so I don't want to be the first one ever jumping in.
You
So
don't
I
want to
want
lead.
to, I want to take a slower approach than, you know, if I was in a different role with a fintech or something. So it's really challenging. I mean, one of the things that we are trying to gets me excited is, we just created the Office of Small Credit Unions, and then we're hiring a director of small size credit union solutions consultant to help our credit unions and to really be out there, understanding what their challenges are, their needs, and to bring solutions back. So, we're really focused on helping our credit unions on their needs. I really think that one of the things that's made us successful is we haven't really gone after the sexy fintech product stuff. We've really focused on some of the old school, from the card processing to the audit company to the marketing company, our title companies. We've really tried to help credit unions on everyday transactions and things that impact them every day. And, I see, 80-90% of our focus still on that. Don't get me wrong. I mean, if we can find a fintech that's out there that can really help our credit unions, we're all over it. But I like to take that wait and see approach.
So when you look ahead and you think about, what you're really excited about coming down the pike, is it the small credit union, Office of Small Credit Unions, and what you're doing there?
Yeah, because I mean, I hate when small credit unions merge. I think small credit unions are needed. We have to find ways to help them. I'm very passionate about this. I mean, I'll talk to some of my team members for hours about this topic, where it just excites me because we need to help them and help them to prosper and succeed. And it's us rolling up our sleeves with them and finding solutions and products to help them grow. And if you go into a small size credit union and just stand there and watch how members come in there and interact with those credit unions, it's amazing. They usually know each other by name. It's old school, and I really appreciate that. I really like that, where you're not a number even as you're walking in. So, we want to help as many as we can, and we want to partner. There's other associations out there that focus on smaller size credit unions. We want to work with them. It's not just us, it's a we. So the more we can partner with, the more we can help. I mean, even the tools that we have with your partnership, and the home improvement and things, those are tools small credit unions can use to help grow their balance sheets. Those loans will help them.
No,
And they don't have to do anything, right? I mean, they sign up, they commit to, and it just really helps the credit union's balance sheet.
you're focusing on things that are practical needs of all credit unions, but especially the smaller ones, growing their
Yep.
loans right now.
Yep.
So I agree. I agree. Well said. Well said. All right, Steve, why don't we leave it there? That's all the time we have for today. Thanks so much for joining us. To our listeners, don't forget to subscribe so you'll never miss an episode, and we'll see you back here at our next 22 Minutes in Lending.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, be sure to subscribe and leave us a 5-star review.